Time now for a look at the day's business news with Delano de Souza. And Delano, you're starting off with one of the world's biggest banks who've opted to remain in London.
That's right, Tom. Good morning. The announcement from HSBC really cements London's role as a global financial centre. For the past 10 months, board members had been considering a shift to Hong Kong. But fluctuations in Chinese markets and concerns over China's increasing influence in the city helped shape the decision. The bank says it's committed to its Asia pivot strategy, although HSBC's headquarters remaining in London could soon face potential challenges should Britain vote to leave the European Union. Now, over in Japan, it's yet another contraction for the economy. GDP growth for the fourth quarter came in at minus 0.4%, and that's well below analyst forecasts. Consumer demand also fell more than expected. A slow increase in wages has left households unwilling to spend. GDP growth in the world's third largest economy for 2015 came in at just 0.4%. The latest contraction has many wondering if Prime Minister Shinzo Abe's strategy for reviving the economy is working. Let's get a check on the markets now, and stocks in Europe have just begun trading, and it's green across the board at the open, gains of over 2% on the CAC 40 here in Paris, similar picture on the DAX over in Frankfurt. Shares in telecom firms Orange and Bouygues edged higher at the start of the session. Now, according to media reports, a deal for Orange to take over rival Bouygues Telecom is imminent and could be presented on Tuesday. We'll obviously keep an eye on that for you. And after last week's massive sell-off over in Japan, the Nikkei clawed back some of its losses and ended the session up over 7%. The Shanghai Composite ended down 0.6% at the close. We stay in Asia now, and Chinese year-on-year exports fell 11.2% in January. Imports during the same period declined 18.8%. The growth rate in the world's second-largest economy slowed to a 25-year low of 6.9% in 2015, now as China shifts away from its manufacturing roots. Now, earlier I spoke with our correspondent Ben Lung in Beijing and asked him if consumers were out and spending during last week's New Year holidays.
Retail sales for the week went up by 11.2% from the same period in 2015. So that's very good news, considering those terrible import and export trade figures that you mentioned earlier. But of course, 1 week is not a snapshot of the whole year. It's a long year ahead, and we can expect retail sales figures to drop off at some point, as one Australian bank expert predicted, because consumer confidence cannot be sustained at this rate forever. And if that's the case, then China could have a very bumpy year ahead, if not 2 years ahead, economically speaking, because we've got other issues going on when you talk about manufacturing, output falling, but also the currency depreciation, which is also a major factor in how analysts have been looking at the Chinese economy.
Ben Lung reporting then. Now, here in Europe, Ikea has become the latest multinational to come under the scanner for tax evasion. A report by the Greens in the European Parliament accuses the Swedish furniture giant of dodging €1 billion in taxes over the last 6 years. To do this, the report claims the firm used a complex but familiar system of profit sharing and sweetheart deals with lower tax countries. Yuka Roya reports.
It's easy to assemble if you know the right tricks. In this parody video, the Greens in the European Parliament give a step-by-step guide to IKEA's tax avoidance scheme. In a report published over the weekend, the group says the Swedish furniture company has dodged at least €1 billion in corporate tax over the last 6 years. IKEA uses an all-too-familiar method of profit shifting, according to the MEPs.
They call it tax optimization, but in reality what they do is take profits out of a country in which they make money and put it into tax havens. What's incredible is these tax havens exist within the European Union itself.
To shift profits, for example, IKEA is accused of transferring 3% of its revenue in France to a sister company in the Netherlands in the form of royalties. From there, the money goes to Luxembourg, where the company has struck a sweetheart deal, a tax rate of just 0.06%. The profit goes further to Liechtenstein, where there's no tax at all. In a statement, IKEA defended its business practice, saying, "We pay our taxes in full compliance with national and international tax rules and regulations." The company is far from being the only one accused of avoiding tax. In 2012, French authorities got multinationals like Google, McDonald's and Amazon to pay hundreds of millions of euros in back taxes. The latest accusation comes as the European Commission is trying to rein in corporate tax avoidance. Last month, Brussels announced a new package to tighten regulations, but the Greens say it doesn't go far enough.
And finally, Delano, one big player in the oil market has resumed shipments.
That's right, Tom. Iran has begun its first crude shipments to Europe. Now, before sanctions were intensified, the country was OPEC's second biggest producer. It's now seeking to boost output by 1 million barrels. According to Bloomberg data, French oil giant Total, Spanish refiner Compañía Española de Petrolas, and Russia's Lukoil have all booked shipments. Meanwhile, Iranian oil is back in supply. It's putting downward pressure on the market. Nigeria's oil minister says the mood inside OPEC is shifting in how to end the slump in oil prices. Take a listen.
It's a very funny dynamic because a lot of barrels are tumbling out after the market from non-OPEC members. So the Saudi philosophy is obviously working. But again, it's not influencing, however, the pricing. Which means that whether we like it or not, some barrels are also coming in, which may be overproduction by members and non-members to cover up whatever is going out.
OK, Delano, thanks very much for that business update this morning.